While the Fed is fighting inflation on one hand and wants to continue to bring inflation down, we have a melt up in the stock market while the crypto markets are being left for dead. And everyone at 30,500 was like, this is a new bull market. Crypto to the moon, crypto to a million, whatever it is. Alt season was going to come. I mean, I'm still waiting for the alt season. I think most of us out there are.
Master trader Gareth Soloway is set to analyze the current state of the crypto market, considering the significant developments that, in light of the SEC's intensive efforts to regulate the crypto industry, Gareth possesses all the essential insights to help you anticipate and navigate the forthcoming market dynamics effectively. While many were proclaiming a bullish market for cryptocurrencies when it reached 35,000 level, Gareth maintained a patient stance, awaiting the full cycle of market fluctuations and seasons to unfold. While remaining long-term bullish on Bitcoin, renowned technical trading expert Gareth Soloway sees Bitcoin as low as $9,000 when reading his charts. Gareth has also detailed his plans to dollar cost average as Bitcoin swoons, stuffing more Bitcoin in his bags for an inevitable run-up that he also expects. Gareth Soloway holds a strong conviction that Bitcoin and other cryptocurrencies have the potential to revolutionize the world, believing in their transformative power. He asserts that these digital assets are already making a significant impact, actively reshaping various aspects of our society. Currently, Bitcoin exhibits a robust and resilient performance comparable to the levels observed during its previous peak of $69,000. According to Gareth, Bitcoin is performing well, and one interesting observation is that it has followed a similar pattern to the 1929 stock market crash and the subsequent recovery. This comparison suggests that Bitcoin, like the Nasdaq market, has experienced ups and downs but has shown resilience in bouncing back. Here are a few glimpses from the discussion that we'd like to show you. Before we proceed, make sure to subscribe to the channel and hit the bell icon for more updates.
If we go to crypto, here's your Bitcoin chart. Bitcoin continues to hold my key support level here of around 25,700. This is still bearish consolidation. I still expect more downside. Target remains, and I've said this now for multiple weeks, you're looking at major support at 24,000. Now, the narrative here with crypto is nasty right now, and you can see it. I mean, this is the market where crypto should be ripping. When you see Nvidia going up every day, when you see Tesla going up every day, think about 2021. Those were the stocks that were leading the charge there, but you had altcoins going up insane. You had Bitcoin, you had Ethereum running up, and they're doing nothing. All right, why is this? Thank you, SEC. Thank you, Gary Gensler. You have put the cap here based on so many uncertainties, whether it's with Binance and what the heck's going on there, who knows even what's going on there, filing lawsuits against Coinbase and everything like that, and basically not giving any clarity. Now, again, where is Bitcoin going? Well, one of the things we can see is that Bitcoin has done virtually the same thing that the 1929 market did with the collapse. This market in the Nasdaq has done, which every market has done, guys. So again, to see a bounce like this is not unusual, right? When you see a decline of this magnitude, you're going to get a technical bounce. I think you're still going to see more actions by the SEC, so there's probably more downside to go. Now, will Bitcoin take out the lows? I don't know. We're going to find out. I'm still in the camp that it could. All right, if you look at the dot-com market, and again, dot-com market's so similar to what happened in crypto. Brand new technology will change the world. Dot-com was the internet. Brand new technology will change the world and did. I think Bitcoin and crypto will change the world and is changing the world. It's just going through growing pains. So these are the types of things that I look at as a trader. I don't look at things in a FOMOing greed or fear mentality. I analyze that, and I analyze other people's emotion because it gives me an edge. I say, people are getting way too scared here. Let me go to the charts and start looking for technical support. Or at 30,500, wait a minute. The amount of greed that's in crypto right now is as robust as we were when we were at 69,000. If that denoted a top at 69,000 on Bitcoin, then it probably also can mirror a top here. And what happens? Bitcoin comes back in. It was also a major technical level as seen in the chart right here. So these are the things that, again, as a good trader, as an investor, you have to start paying attention to.
According to Gareth's analysis, the focus is on the Federal Reserve as anticipation builds regarding their upcoming actions. There is speculation that the Fed might consider pausing interest rate hikes temporarily in acknowledgement of the delicate economic climate. The recent reports of the Consumer Price Index have set the financial world ablaze. The staggering 4% rise in consumer prices, accompanied by a surge of 5.3% in core inflation, has raised eyebrows and ignited fervent discussions. Month-on-month PPI for May dropped to 0.3% after consensus of a 0.1% drop had initially been forecasted. Year-on-year PPI dropped significantly, from 2.3% to 1.1%, while the core measure fell from 3.2% to 2.8%, also beating estimates of 2.9%. Gareth highlights the surprising 0.3% decline in the May Producer Price Index, which has sent shockwaves through the financial world. This unforeseen contraction raises crucial concerns about the long-term viability of businesses' profit margins and their resilience in the face of potential challenges.
The Fed in general wants asset prices to stay where they are or go a little bit lower. Now, they don't want the stock market to crash, right? That's not in their cards, but they don't want it to run back to all-time highs because, again, that will create a hardship for the Fed to bring down inflation. All right, so let's get to the PPI numbers today. Remember, CPI yesterday stands for Consumer Price Index, so it's inflation on the consumer side. So right now we're looking at 4% on the consumer side. If you look at just core, which is food and energy, it's at 5.3%. So let's be fair. Core inflation is what affects Americans the most, right? The middle class, the lower income. Food and energy is a majority of what we spend money on, including rents. Rents can also be included in there as well. We know how crazy rents are. We know how crazy home prices are, especially with interest rates where they are. So the stuff that the average American spends money on continues to go up substantially, while everything else is calming down at a 4% inflation clip. Now, what this means, guys, and I want to be crystal clear on this, it doesn't mean prices are going down. It means prices are going up less. So they're still going up. So we're still at 4% overall and 5.3% on food and energy. And that means that every year you're paying 4 to 5.3% more for everything. So it's going to cost you more. Just the nature of it. Unless we get inflation to go to zero, prices are always going to go up. Now, one of the reasons why, and my thesis has been for a long, long time, and we'll get to the PPI data in just a minute, but my thesis has been that bringing inflation from 9 to 5 or 4 or even down to 3 is relatively easy. What's not easy is getting it from, let's say, 3.5% to 2% where the Fed wants it. And my guess is, and you can quote me on this, you can save this clip, is that we will get in a scenario where they get inflation to, let's say, 3% and it becomes sticky. And the economy starts to trigger a recession. And the recession starts to get worse and worse and worse. PPI data this morning coming in, it fell 0.03% or 0.3% in May, the third drop in the past 4 months. The markets had expected a decline of 0.1, so better PPI data. Now, interestingly enough, if we go to our charts, the charts are actually showing us that the markets are not reacting to this decent PPI data. And you might say, well, why? Well, the answer is very simple. The PPI data is old news already. Everyone's focusing on later this day, 2 p.m. when the Fed is going to make their decision and give their comments. So the market is kind of a little wary here. We've had these crazy melt-ups. The NASDAQ 100, we can clearly see here, had a big day yesterday. In fact, it looks like we're now negative by just a hair on the NASDAQ 100. And again, it's had such a massive move up that we're now at a point where the Fed has to deliver something dovish.
The market anticipates a significant increase in Fed fund futures, implying higher interest rates later this year. Recently, PPI report is bumping the financial world and raises the critical questions. Still in this environment, Gareth predicts a new lows in crypto market and believes history will repeat and crypto will surge. What is your opinion on Gareth's belief in the potential decline and subsequent surge in the crypto market? We encourage you to share your views in the comments section. If you found this content informative, please give it a big thumbs up and subscribe to our channel for the most up-to-date news and videos. We appreciate your input and look forward to hearing from you again soon.